Hey, good afternoon, guys. I hope you and your family and your loved ones are staying safe during this pandemic. The topic that I'll be covering today will slightly touch upon what we're going through as a society currently, but nonetheless, it'll hopefully bring some new information that you guys have never heard before. Without further ado, in the public mind, the origin story of the coronavirus seems to have been well fixed in the late year of 2019. An individual at the now world-famous Hunan seafood market in Wuhan was contaminated with a virus from one of the illegally sold animals. The rest is part of an awful history that is still really taking shape, with COVID-19 spreading from the first group in the capital of China's Hubei province to a pandemic that has a death toll of over 128,000 worldwide. However, despite the lives taken from this deadly infection, the virus goes further to affect worldwide prices. Since January, the spread of the coronavirus has sent worldwide financial exchanges tumbling and turned around almost all the positive energy and oil costs in the course of recent months, multiplying down on a skeptical oil request standpoint despite numerous short-term risks to supply. Although, as this virus continues to spread, the oil market will continue to suffer its losses, but some questions still remain. What is the relation between the virus and both the oil and stock market? How much is the oil currently, and what could the potential future look like for this impending oil prices? Which segues into my first point that I'd like to talk about, the coronavirus and its relation to the oil and stock market. When observing closely, the virus affects the oil market in two major ways. First, travel restrictions due to contaminant efforts limit the use of the jet fuel, and supply chains slow and industrial activity declines as companies send workers home, meaning less oil and oil-based products are being used and produced. This has very direct effects on oil consumption and informs near-term calculations of real oil demand. Our second main point is the stock market's reaction to the effect of the coronavirus on the global economy builds a projection of global oil demand over the long term. As a broader market sentiment about the health of the global economy declines, so do projections about the future on oil demand curve, prompting flight away from oil and energy stocks and further drawing down prices. After observing how the virus correlates itself with both markets, it leads us to talk about what our current statistics are when it comes to oil prices per barrel, both domestically and internationally. However, let me mention a brief note from the Barclays that indicated in late January, projecting that oil consumption would decline by approximately 600 to 800,000 barrels per day, or BPD, over the first quarter, and by 200,000 BPD over the entire year, has eclipsed by the International Energy Agency's, or otherwise known as the IEA, downward revision of annual oil demand growth by 365,000 barrels per day. The conversation about oil demand for the balance of the year is now dominated by the emerging possibility of a recession. It is also worth mentioning that Russia has declined last week to join the Organization of the Petroleum Exporting Countries nations in agreeing to cut production in response to the slowdown in demand from the coronavirus, which had shuttered factories in Asia and Europe. In response, though, Saudi Arabia announced that it would ramp up its oil production, resulting in a sharp decrease in price. With that said, within the U.S., Western Texas Intermediate Crude, or WTI, serves as a benchmark for the U.S. oil prices and has significantly dropped by a staggering 32% this year, which has led their price per barrel at an all-time low of just below $20 from its successful trading price at around $45. On the other hand, internationally, the Brent crude oil industry, which also serves as a benchmark in the Northwest European territory, has also dropped about 30% according to an article from the CNBC, which results in its price per barrel at just over $27. Again, still not up to par with its previous sales at almost $50 per barrel. Now, at this point, some may ask, what does this all mean and what will happen in the future? Well, according to a published article from The Balance, Kimberly had stated and mentioned that the worldwide crude oil prices will average $33 a barrel for 2020 and $46 per barrel in 2021. That is also according to a short-term energy outlook by the U.S. Energy Information Administration, or the EIA, The EIA also forecasts that oil prices will average $23 per barrel in the second quarter of 2020, but it'll also increase to about $30 per barrel in the second half of the year. In conclusion, with all that stated above, it is fair to say that during a crisis like this, all subjects are at stake here. In this case, when it comes to oil, it's also unfortunate to say that even though this may benefit us as a consumer, it comes with an increasing price volatility. We should also keep in mind that this drop is unusual because it's caused by a change in demand linked to an outbreak of a disease rather than a change in supply because of emerging technology. Thank you. I hope you guys stay safe.